Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial jargon and find the real story. Today we're looking at Catheter Precision Inc. and oh boy, they've done something pretty significant. It seems like they're trying to make their stock appear a little more, how should we say, substantial. So Catheter Precision, a company whose stock trades on the NYSE American under the ticker VTAK, has just announced a significant change. Back in July, their stockholders gave the board the okay to do a reverse stock split, and now they pulled the trigger on that. This report, filed on August 13th, officially tells us about this move. What is a reverse stock split? Think of it like this. If you have 10 $1 bills and you exchange them for one $10 bill, you still have the same total value, but you have fewer bills. Companies do this to boost their stock price. Sometimes if a stock price gets too low, exchanges can delist it, or it might not look attractive to big investors. So by reducing the number of shares, they can artificially increase the price per share. The company filed an amendment to its foundational document, its certificate of incorporation. This is the official paperwork that makes the reverse stock split happen. The big news is that they've implemented a reverse stock split. They had approval to do it between a 1-for-5 and a 1-for-19 ratio. And the exact ratio they chose, a hefty 1-for-19. That means for every 19 shares you owned before this split, you now own just one share. This change officially kicked in at midnight on August 15th, and you would have seen your shares trading on a split-adjusted basis starting that same day. So if you own shares of VTAK, you would have woken up on August 15th with far fewer shares, but hopefully each share would be worth 19 times more than it was the day before, keeping your total investment value the same. Interestingly, when this happens, they often get a new CQS number, which is like a social security number for the stock. This helps track it moving forward. The process is automatic for shareholders. If you had 19 shares, they were simply combined into one. Now here's something important for shareholders. If you owned a number of shares not divisible by 19, you won't get a little piece of a share. Instead, those fractional shares will be sold by the company and you'll get the cash value of your fraction of a share. This is pretty standard practice. Let's look at the numbers. Before the split, they had over 23 million shares. After the 1-for-19 split, that number dropped drastically to just over 1.2 million shares. This significantly cleans up the share count. What didn't change is the total number of shares the company is allowed to issue. They still have the capacity to issue 10 million shares of preferred stock and 60 million shares of common stock. The reverse split just changed how many of those common shares are currently out there and trading. This also affects things like stock options and warrants. If you hold these, the price you can buy shares at and the number of shares they represent would have been adjusted proportionally. So your options might be for fewer shares but at a higher price per share to reflect the reverse split. The company is also referencing information from other sections, essentially saying that the details about the amendment are important for other parts of the report too. They mention a whole list of registration statements they have on file with the SEC. This shows they are actively involved in raising capital or keeping their securities offerings current. Basically, this filing is being added to all their previous filings, updating them with this new information about the stock split. This is a technical point, but it means that any shares that were registered but not yet issued are also being reduced in number to match the reverse split ratio. Here's Exhibit 3.1, the actual certificate of amendment. This is the legal document that officially enacts the change. And Exhibit 104 is the interactive data file. This is what makes the document machine readable, so automated systems can process the information quickly. And finally, the signature block. This report is signed by Philip Anderson, the Chief Financial Officer, on August 15th, confirming the company's official action. So what's the takeaway here? Catheter Precision has undergone a significant reverse stock split, consolidating its shares by a factor of 19. This is typically a move to improve the stock's market listing or appeal. From a financial perspective, this action itself doesn't create or destroy value for shareholders, but it's often a precursor for companies trying to move past a period of low stock price. So while it's a structural change, the real test will be how the company performs moving forward. Is this a strategic move to set them up for future growth or a desperate attempt to look better on paper? The market will decide. Alright, that's our breakdown of Catheter Precision's latest filing. What's your take on this reverse stock split? Does it signal strength or desperation? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and don't forget to subscribe for more decoding of corporate finance. Also, check out the Discord link in the description if you want to join our community. Thanks for watching, and we'll see you next time on Corporate Decoder.